In this episode of Financial Investing Radio, I speak with the person that introduced overnight trading to the financial markets. He will give you some guidance on how to build your wealth. I speak with the wealth architect.
Welcome to Click AI Radio, where you'll learn the secrets to transforming your small to medium business. Grant has been helping businesses transform using technology for over 30 years. Advanced technologies like artificial intelligence have been available only to large companies and advanced technical teams. Grant will discuss how you can use to leverage AI and other technologies to grow your small to medium business. As a gift, Grant is offering his ebook, AI for Sales Growth, at clickairadio.com. Now, here's your host and biz tech geek, Grant Larson.
Hey everybody, welcome to another episode of Financial Investing Radio. Okay, so today I have in the house, it's taken me a couple tries here actually, literally, to catch Mark Yegee with me here today, longtime expert in the investing world. So grateful that he took the time to come here today and talk with us and share some of his secrets on how to grow your wealth. In fact, I think he's known as the wealth architect. Anyway, without me saying anything else, Mark, welcome.
Well, thanks. I'm not sure I like the title of longtime expert, but you know what? I guess it goes with the territory. But thanks. Great to be here, Grant. And can't wait to get into what we do and what you do and have some fun with your audience. This should be great.
Yeah, thanks again. I appreciate that. So one of the things that caught my eye when your organization reached out and I was reviewing your profile, I just have to start here. There's this tip here about you getting into this world, into the investing world at the age of 12. I mean, holy smokes, at the age of 12, I was milking cows and hauling hay. I mean, there was not a stock market in sight. So I've got to ask you, I mean, the only stock I saw had horns, right? And where I was milking it. So, you know, if you'd have said, how's the stock market? I'd be like, well, we got, 50 cows in the pasture. I'd be like, what are you talking about? So how did you get into this at 12?
Well, my dad grew up on a farm. I didn't. I grew up in the city. And so I mowed my yard and cleaned my pool and got paid to do that. And every day I would see my dad reading the Wall Street Journal, and it had all these symbols in it with numbers by them, and he would circle stuff. And I was so curious about what he's doing. And finally one day I'm like, Dad, what are you doing? And I think you thought I was ready. And so he said, oh, this is how you invest in other people's businesses. And I was like, oh, cool, great. So over time, he started to kind of teach me that, you're running your own business, doing your lawns, but you can also go out and invest in other people's businesses. And I thought that was fascinating. And after a while, after maybe a couple of months of telling me about it, he goes, but the only way you're going to learn it is to take some of your money and put it in. And I did. And so my first stock, I think it was 12 or 13 years old. It was right around that time. It was 100 shares of a company called Aileen, company I'd never heard of.
I haven't heard of them. Who's Aileen?
No, well, I don't think they're around anymore, but there was this women's clothing store in the malls, and and it fit all the criteria. Low PE. I mean, my dad taught me a few things, and it was alphabetical that I finally went, hey, here's one. So I circled it and I bought, $300 worth of that stock. It was 100 shares at $3. And I just would watch it every day. And I was fascinated. Oh, there's the new print on it. And there's the new price. And the stock went to $6. So it was probably the worst thing that could ever happen. It's like when you grab the golf club and you hit it right down the middle and you think you're a good golfer.
This is easy, right?
This is easy. It's like this, if you go to play craps and you hit it on the first dice roll.
You're hooked.
And so I invested again. I saw a commercial on TV, and it said Allegheny Airlines is becoming US Airways, or US Air, I think it was at the time.
Yeah.
And I was like, wow, what a cool name for an airline. And that was the only reason.
That was a criteria.
Yeah, I think it might have met some of the other criteria as well. So I bought it, and it went from 17, I remember, to 35. So I doubled it again, which is probably the next worst thing that could happen, because now I'm like, this is a piece of cake. Plus, I don't even have to work, and the money's doubling. And
yeah.
Anyway, so I guess I could buy more candy than I could before. But That was it. That was the beginning. And then he started introducing me to books. My dad was a big personal growth guy. So I had read books, by Dale Carnegie very early on. I had read books by Edward Thorpe, actually in the business, who wrote a book called, oddly enough, his first book was called Beat the Dealer. This was a guy, he was an MIT professor. So he taught math at MIT, and he went to Las Vegas and he figured out how to beat the roulette tables. And he had another guy helping him, and this was kind of a rudimentary computer in the 50s. And he figured out where the ball was coming out and how quickly it was. Anyway, he figured out a way to get the probabilities in your favor, and he started to beat the roulette tables, and they kicked him out of Las Vegas.
Oh, I bet.
So he went back, and then he figured out, well, I'm going to figure it out on blackjack. And you've heard the story. There's been a movie made about him. And
it's 21. Is that the movie 21? Yep.
All these kids went to MIT, the students, and he brought them, and they all cleaned Vegas out. And then finally he got kicked out of that. And then he turned his efforts to the market. And then he wrote a book called Beat the Market. And it was basically how to buy a stock and sell the warrants against the stock, which today are basically known as options. They're still warrants, but most people don't know what they are. Yeah. And it was a system of covered calls before they even had options. They didn't have options until 1971 or 1974, I think. And so, but I was fascinated by it because my dad was like, oh, you got to learn this. And it was this thick book. It was really boring. But I started to apply it, and I applied it so much that when I was 16, 17, 18 years old, by the way, I bought my car with the winnings and the monies that I made in those first few investments. I set up a brokerage firm at E.F. Hutton, and my dad had this old timer broker. And I said, okay, Harry, I want to buy 100 shares of IBM, and I want to sell the call options against it. And he's like, what? And so we had to call New York and get the options principal from E.F. Hutton on. Oh, and really? He understood what I was doing, but my broker didn't even understand. I had to teach him what I was doing. Wow. And so all through high school and college, and
this was in high school, you did that. You sold your first covered call in high school.
In high school on IBM. Yeah, I used to sell IBM. And this is back when you pay a commission of $300 to do IBM. And they had quarterly options, and it was a different game. And now we have so many more tools that are at our disposal. It's great. So yeah, I did this all the way through college, and finally, I had several different entrepreneurial ventures, and then I actually sold copiers, which for me was the worst thing anybody.
Wait. You sort of jumped into that. Wait. You're selling options, and you went from that to copiers. What happened, Mark?
Well, I went to college. I didn't think that making money in the stock market was going to be my career. So I went to college. I got a marketing and business degree, and everything was hunky dory. And then I got out, and I started an entrepreneurial company in college. It was back when the Swatch watches were this big craze.
Oh yeah.
And you remember those where people would put 10 Swatch watches on their wrists? Yeah. And I thought, well, I went to the University of Florida, and I thought, why isn't there a Swatch watch with a gator on it? Like a University of Florida gator, And I went to the the alumni office, and I said, can I license the gator? And this was back before the internet. This was back really right around the time faxes were becoming popular, but still pretty early, back in 1980. What was this, 85? Yeah. And they licensed the Florida Gator, trademark to me. And I figured out a way to get to Hong Kong. I had no money at all. And when I was a junior and senior in college, I went to Hong Kong, and I met manufacturers, and I figured out a way for them to put the Gator on these watches that were orange and blue, the exact colors of the school. Yeah. And I brought back these, 2,000 watches, or I had them manufactured and shipped. And I had them in my college. It wasn't my dorm room. It was my fraternity. I lived in the fraternity house last semester. And so I had them stacked floor to ceiling, all these watches, right? So I'd go to the games, and I would sell these things, and I learned a lot about a lot, right?
I learned a lot about
traveling, manufacturing, business, buying good quality products versus crappy products. And I expanded to 23 schools in the Southeast, and finally just got out of that business about 4 years later. Wow. And then I sold copiers after that, and that was miserable, but that was again instructive. And then finally I said, why, I've been doing the market all these years. Why don't I just go do that?
Amazing.
Yeah, I got a job with a guy named Ernie Oldie, who had Oldie Discount Stockbrokers. It was a discount broker like Charles Schwab. They were actually good buddies, and they started when those got deregulated in the 70s. And I worked for Ernie for a year and a half, 2 years, something like that. Started my own brokerage firm with a partner. And then we grew that to a pretty big venture. It became a Wall Street company that applied to do this financial technology. I could bore you with all the little stuff that I've done in between, but it all has led me to this spot where I had a big trading firm, a Wall Street trading firm, and we traded, billions of dollars worth of securities.
I saw that. That's incredible. Yeah. Well, yeah. And did I read it right that did you guys introduce after hours trading? Is that true?
Yeah, that was actually my idea, and everybody thought I was crazy at the time. But I thought, we have this system that all we do is if somebody wants to buy and somebody wants to sell, our system was a computerized system that just matched those sellers. And I said, why does that have to stop at 4:00? Why can't we, if somebody still wants to put the order on, why can't we do it at 4:01? And then if we can do it at 4:01, why can't we do it at 6:01? And then why even shut the thing off? Let's just let it run all night. It happened automatically anyway. And so, yeah, we introduced after hours trading in 1999, I believe. And I was on NBC Nightly News with Tom Brokaw and, a few things. And then
you're talking to me now. You're talking to me now. Oh my God.
And now I've moved up to talking to you. Yeah.
Wow. You finally got up to Grant Larson. I mean, Tom Brokaw.
It's been a long time coming.
Just a stepping stone. Oh my goodness.
But you got to stand on the giants that came before you to get to Grant Larson. So, but I'm glad to be talking to you because, everything that I've done in my life has led me to this exact point. And that exact point is now where I have a few hedge funds that I run. They're all based on all these mentors and all the knowledge that I learned over the last 45 years. And now we help people make what we call safe, reliable income. Although if you look at it today with this market, it's not safe, reliable income today.
Yeah, I'm turning my head and I'm looking at it. And can you say sell off?
Yeah, don't even look.
It was massive.
It is a light volume sell-off, so I believe that there's a bounce coming in a couple of days. But boy, it's painful for a lot of people right now. It's people think you just buy a stock and you hold it, and that's the way you invest. And then you get these 25% corrections in the market, and people's 401ks are decimated. They go down 50, 60, 70%. Yeah, and it's just a shame. It's just a shame.
Ever since last November, I saw signals at the end of last November on my systems and went, okay, I'm going to start preparing to hedge here. So I've just been building my hedging positions since then. And we had some interesting volatility a couple times, but right now it's down hard for sure. So
it's horrible. Yeah. And if you started in November, you probably, if you correlate it, it's the exact day that Jerome Powell from the Fed said, we're going to start to raise rates. And from that point, we're down about 27, 28%. And some stocks, I can tell you, some stocks are down 50, 60, 70%.
Yeah. I mean, it's like horrible. Facebook and others. I mean, they're down like massive, just huge, 50, 60 huge amounts. Yeah. Netflix got hammered with the Ukraine thing. And a lot of them are down really super.
But it doesn't have to be that way, right? Like, a lot of people just don't know what they don't know. And we tell people that they can make 2 to 4% a week. Now, it doesn't always happen, but our goal is just like that analogy that I threw out before about the craps table. It's to get the odds on your side, right?
Yeah.
I mean, this is not gambling, but if you use gambling as an analogy, you can understand it better. If you're sitting around a poker table like Annie Duke or Phil Ivey or those guys that are on, the World Series of Poker, they don't win every hand. Yeah. But if you have a pair of aces, you have the odds in your favor if you stay in. Unfortunately, sometimes 3 kings comes up and your opponent has a king, and then you lose. But that doesn't mean you shouldn't have been in the game. So what we try to do is we try to create safe, reliable income by renting stocks to other people that are willing to gamble and pay us a premium for having the option to buy our stock. I can explain that a bit more with an analogy if you want to hear it, but that's really what we do. And that's,
are you selling a lot of options then? That's your main strategy?
Yeah. We buy a good solid stock. So we have a system called the cash flow machine, right? We call it the cash flow machine because you put cash in and then it gives you cash out, more cash. And it's a system that creates income using what we call the 4 cornerstones. It's the right stock.
Okay.
Not just any stock,
the
right market, because you want the tailwind to be behind you.
Yeah.
So we use a component of market timing, and it does help. And then it's got to be the right spot on the chart. And usually you can find a high probability spot on the chart where where the institutions are behind the stock, pushing in the right direction.
Yeah.
And we don't want to be against the institutions. That's the big money, right? We're
That is
just
the big
the
money.
little people. Yeah. So we want to be with them, and we can see where they are. They leave footprints on the chart.
Yeah.
And then we go in that direction. And then the fourth cornerstone is we squeeze the juice, or we collect the rent.
Yeah.
And that's the option premium that we get for selling.
Yeah.
Creates an income, and it's a defensive strategy that we make, 2 to 4% a month conservatively.
Now there's obviously a fair amount of margin that's needed in order to do this kind of thing. So you typically need to have fairly decent size accounts to do some of that stuff. What's sort of the entry level that you see most of the people come in at? How much is what sort of account size or capital do they need to have?
Well, it depends. We have a breadth of options that you can use. So I have a hedge fund that I run using this strategy for accredited investors, people that are worth, more than $1 million, rich guys basically.
Yep.
But not everybody qualifies for that. And I want to deal with I want to make this accessible to everyone. So we have a set of courses, and we have, my favorite thing is a mastermind group. And so the mastermind group is around a series of courses. And they're video courses over my shoulder. I show you how to do the trading, and you understand the philosophy behind it, and I give you the whole strategy. And then it's also surrounded by a full ecosystem of support. So we have like-minded people that are also giving you support, people that have just gone through the learning that you've gone through. You get mentorship from me, and I've got 4 decades of doing similar things and this. You get, you'll actually get something called the private access group, where I put out the actual trades I do in my hedge fund. Wow. So you can learn from them, mimic them, do them, do subsets of them, whatever. And then on Friday, and again, this was what I was alluding to a bit ago. On Friday, we have a mastermind call where we all get on a Zoom call. Some of us will share our screen, show the trades we're making. I'll usually teach a concept about the current market or something, that we should know. And then we hold each other accountable through a chat group all week. Like, hey, what are you doing? Who's doing what during the Fed announcement? Why are we, selling, the Tesla when Tesla's coming out with numbers, things like that. So to answer your question, that mastermind group, it's an investment in yourself. I give a money back guarantee if you don't make enough money to cover the tuition, because it's not a small amount, but it is a small amount if it's an investment in yourself, and you make it back with your investments. But in order for me to feel good justifying that, you need about $150,000 to $2 million as a minimum. Now, not everybody has that. And I've had people that just, take the courses and do extremely well with 5 or 10 or 15,000. But they're not going to afford to be in the mentorship program and the mastermind group and all that kind of stuff, but they can take the courses. And so we have a full breadth of offerings for people, just so that they can learn it. I also have a free course on my website that you can sign up to take, that kind of introduces you to the concept of what we do. We got all kinds of stuff. My goal is, Grant, it's financial education, right? We don't teach people about money in school. We just don't.
Yeah, it's not.
I don't know if it's not at all. I don't know about you, but I use money every day. I don't use Romeo and Juliet every day, and I don't use the Pythagorean theorem every day.
What?
And I don't use
not even at the grocery store. Okay, all right.
I haven't used the Pythagorean theorem, I don't know, in at least a week.
Yeah,
and I don't know much about I don't use Cleopatra and Henry VIII and his wives every day. But boy, I use money. It would be nice to know. Would have been nice to know, without having to go outside and learn how to buy houses and real estate, how to invest in the stock market, how to do my taxes. Would have been nice to have learned a little of something of that.
Yeah.
So I believe that that's the biggest thing that people can do, is they can invest in themselves by getting financially educated. And so that's a little part of what I do in the world, is help people with that.
So it's interesting that you're making this available to a wide range of people, regardless of where they are, right? Certainly, you've got the capabilities to help those that are accredited, but for the person that's just trying to get going, I mean, you walked that journey, so you understand that, and therefore you've made this available to them to help them ultimately get there. Are your positions intended to be longer term? Do you have sort of a time frame? Are you more like a swing trader? Or are you sort of long term, or you just sort of break it up? You got a portion of the portfolios shorter term and some sort of longer term investment. What's sort of your philosophy on that?
Well, I can give you the short answer or the little bit longer answer that has some more depth. Let me give you the longer answer since we got a nice podcast format going here. The longer answer is that everybody says, oh, you should be diversified, right? Mm-hmm. And to most people who are uneducated, don't have the financial education that we should have, they're educated by Wall Street, and Wall Street is run by two groups, lawyers and salespeople. And so lawyers are there to not get the firm sued. And for that, they put you in average investments, because how can you get sued? How can you sue anybody if you just did an average return? And the salespeople are there to grab assets. And the more assets you grab, the more they pay the salesperson, but the more the firm can trade of that money and make money on it. And so what they want, what we hear, and I was a Wall Street guy, so I can say this, is they want you to be diversified. So they tell you, put your portfolio in a nice little portfolio of mutual funds and ETFs, a couple of stocks, and maybe some bonds, and you won't get hurt. Right. And you get this average, low returning 8% thing that you feel great about because woohoo. But that's the average, right? The S&P 500 over the last 100 years has made 9.4%. Yep. So if you're doing around if you do 9.6%, you're feeling really good about yourself. But, I did a study. Exactly. You pat yourself on the back, right? But I did a study a few years ago, and in 2000, I think it was 13 and 14, or it might have been 14 and 15. I can't remember, but it doesn't matter the years. The stock market did about 28%, mm-hmm. or the S&P 500 did about 28% during those 2 years. But the top 10 stocks did 185%. So what you're doing when you diversify is you're supposedly spreading out your risk, but you're also muddying up your returns. You're taking the good returns and you're making them crappy returns some stocks even went out of business in the S&P 500, mm-hmm. and the rest are kind of in the middle, just kind of figuring it out because not everybody can win. So why not just invest in the top 10, right? And easier said than done, of course. And so what we do is it's a probabilities game. We, when you and I, if you buy a stock, and I know you're a futures guy too, but if you buy a stock or a future or an option or any kind of investment, you've got a 50% chance of being right at the moment that you do it. Yeah. You have a 50% chance of being wrong. Yep. Because there's a smart person on the other end that's got the other side of that trade.
That's right. And
they got a 50% chance. So it's whatever you do after it. So what we do is we try to find the right stocks that are trending up, have above average return on investment, return on equity, earnings per share growth, sales growth, those kinds of things. Great products. That gives us a little bit of an edge. Maybe takes us to 52%. Then we try to find the right market, because 70% of a stock's performance, it comes from the performance of the market itself.
So whatever sector they're in, right? Whatever.
And then sector performance is 38% of a stock's performance, right? Mm-hmm. So you're stacking these percentages, 52 to 54, maybe 55, 56. Then you find the spot on the chart where it's about to break out, or where there's institutional support, or it's bouncing off the 200-day moving average or the 50-day. There are spots on the chart that statistically over the last 120 years on the right stocks seem to be where that they're going to support the stock. Mm-hmm. So now you're inching your probabilities up. You never get to 100%, no. But if we can get to 60, 70, 80%, great. Then what we do is we create income from the stock. Now, here, I don't know if your audience wants me to get wonky with statistics, but I'll give you one more.
Wonky, go for it.
All right, here we go. When you buy an option, and an option is the right to do something, but not the obligation to do something at a certain price before a certain time. When you buy an option, you have an 80% chance of losing all of your money.
80%. Wow.
That's statistically what it is. 80% chance all options expire without the buyer making money 80% of the time, because there's no free lunch. But there's also the other side of the trade. Somebody sold that option to the buyer. Yeah. Well, if somebody's losing money 80% of the time and they're the buyer, what do you think's happened on the other side of the trade?
That means someone's got 80% wins. Yeah.
And that's right. It approaches 80%. Doesn't always happen, but it does have the statistics in your favor, because when you sell an option, you always pocket the time premium. And this is what we teach in the course of how that works and what that is. But you always get the time frame. You always get the amount that the gambler is willing to risk to have certain amount of time to be able to do something, because they're getting leverage. And do you want me to give an analogy so I can tell you kind of what we do?
Go for it, Mark.
So most people understand real estate way better than they understand these intangible pieces of paper. They're not even pieces of paper anymore in the stock market.
Right.
So imagine you open up your window in your front door and you look out the front door and there's a vacant lot across the street that your other neighbor, your friend Jim owns, right? And Jim puts a sign on it that says for sale, $100,000, right? And so, wow, your neighbor's got his 1 acre lot across the way for $100,000. And let's say this other guy, Bob, is driving down the street, but Bob heard that there was a Hilton going to be put right up next to Jim's lot. And it's going to make Jim's lot worth not just 100,000, but since it's going to be this Hilton resort that's going to be put there, it's going to be worth $1 million.
Yeah.
Problem is Jim's broke. He doesn't have $100,000, or not Jim, but Bob, the guy driving down the street.
Yeah.
But he goes to Jim, he stops his car and he finds Jim in front of the lot there, cleaning it up, getting ready to sell it. And he says, hey, I'll tell you what, I don't have the $100,000 to give you right now, to buy the property, but I do have this $10,000. Can I give you the $10,000? And all you have to do is promise to take it off the market, not sell it to anybody else. You get to keep the $10,000 for doing that. But anytime in the next 6 months, you have to sell it to me for $100,000. And Jim, the guy selling it, goes, wait a minute here. Hang on a second. I get to keep the $10,000. I take the property off the market, and you're going to buy it from me for the same price I'm asking anyway, sometime in the next 6 months. And if you don't, I still keep the 10 grand. And Bob goes, yeah, that's the deal. And they shake hands and they make that deal and they write up a contract. Now, a couple of things can happen. One thing is Bob could have been right. And there's a big Hilton. They make an announcement. There's a big thing in the paper, Hilton to buy, the lot next door to Jim.
Yep.
And now Bob took his $10,000 investment and now he turned it into $1 million. Yep. He made a huge amount of reward for knowing about that rumor. As you and I both know, information is not perfect on Wall Street. Yep. And it was a rumor and it never even happened and nothing ever happened in the next 6 months. And there's no announcement. And so the option expires. Jim kept the $10,000.
Yeah.
So now now he's got a $90,000 basis in the property, let's call it.
Yep.
And Bob lost the whole $10,000. So Bob had high risk because he lost it all, but he could have made a killing.
Yep.
But Jim made the $10,000 no matter what. And he could turn around and find another Bob and sell it to another Bob for 10,000 and another and another and another. So to answer your question, what we do is we find a position that we like. Like I said, it's the right stock. And then we do the same exact thing in a stock market. So we find a position like Tesla right now is the big one we're all in. We were in Apple. A lot of us are in Apple still too. Some of us trade some Apple. We have these great stocks like Nvidia and Microsoft and, the big ones.
Yep.
And there's certain criteria that they fit because this doesn't work for every stock.
Yep.
And then we just find a gambler out there like Bob that was driving down the street that thinks he knows more than everybody else. And he wants to give you some money in order for you to take that stock off the market and sell it to him at a certain price before that happens. And we do it weekly and monthly. We don't wait.
Weeklies even, huh? Okay.
We do weeklies. Yeah, we do weeklies. And people are paying a lot of money to have the option for a week to buy a share of Tesla in a week that goes up. They'll pay you $20 for a week for the stock to go up another $20 plus more. So
the delta is really high at that point too, right? On those weeklies. So yeah,
it is.
Yep. Wow.
It is. So
That's
it's and it works. I could tell you some stories about some of the people in our program, and a lot of people are physicians, and the physicians are. This is funny to me, but I didn't know this, Grant. But a lot of physicians just don't like being physicians, not because they don't like helping people, because that's what they really do. Yeah. They just don't like the politics.
Oh.
So they don't want to be told when to be at work, and they don't want to be told the politics and all the things they have to write up in the computer dictation they have, all this stuff. And so they can't wait to retire. And I always say, why wait till you're 65 and your hips don't work and your knees creak, and then you can travel the world and you don't feel like it? Yeah. Why not retire a little bit earlier? So a lot of our guys, and gals in our program are retiring early. using some of these things. And I'm really proud of that. That's a lot of fun.
That's an amazing, I love the analogy. And so it sounds like you're doing weekly as well as monthly sort of positions. So you're turning them around that. You get involved in Leap at all? Or are you doing really long-term positions also?
We actually do. We do long-term positions as a proxy for the stock. That's something called synthetics. And that's a wonky concept because there's deltas and all kinds of things that you have to teach people about. But yeah, the 2 to 4% that we make is our basic. And then we kind of ratchet things up if you want to take a little bit more risk. We like to tell people it's about 3 times more return that you get, but take 1x more risk. But it all depends on the stock and the market and how you trade it. And 90% of this at the end of the day comes down to emotion and mindset. And I always tell people,
because that to me, that seems like that's one of the most critical aspects of this. There's the mechanics that you're describing that have to be right. But with all those being quote unquote right, boy, that mindset, if you can't hold that position or you're not confident in the system, then you really get whacked hard. How do you get to the right mindset to do this, Mark?
Well, the premise starts from the word emotion. And money is tied to emotion very significantly, right? It's the number one cause of divorce, even more a bigger cause than bad sex, and so money is a big deal. And people tie it. They work hard for their money. And then when they put their money, it's so easy to click a mouse to get into a stock, right? Click, boom, you just invested $100,000. You don't have a strategy for when to get in. You don't have one to get out. You heard Kramer say something on TV that you should buy the stock. And pretty soon you're like, oh my God, it's down $10,000. And now you're getting emotional. And I don't know about you, but when you're angry or sad or, you don't make good emotional decisions, right?
Yeah, not a time to make a decision. Yep.
It's not the time. So what we do, and I believe that anything that is worth doing right, is we teach people a series of rules, right? Because rules allow you to say, it's either yes or no, right? If you have a rule, it takes the emotion out of the event. Doesn't mean we don't have to deal with emotions, because boy, there are days like today where things are moving around a lot. Oh, yeah. And but we also teach you what to do in markets like today. Like, what do you do? Do you react? Do you protect? Do you buy a collar? Do you do whatever? Yeah. And that system, which is a system of rules, is designed to reduce emotions, because when emotions go up, intelligence goes down, and vice versa, right? Yeah, sure. And so our goal in anything that you do in life, right, have a system. Like Michael Jordan had a system, and he became the greatest basketball player ever. Anybody has to have a system to do something really, really well.
So help to overcome or manage, maybe not overcome, manage the emotions through the system is the core of it. That helps you to have and maintain the right mindset. I have another question for you. Slightly different topic. Yeah. You have time for one more question?
I got as much time as you want.
Okay. Question. This is crypto. What is going on there? Is that the place to go put your money? What do you think?
Wait a minute. You said, do I have time for one more question? And then you asked me about crypto, which is a whole new universe of stuff.
Yes, I did.
Oh my God. Yeah. I have so much fun with Bitcoin right now. And it's because a year ago, I was the biggest Bitcoin skeptic that there ever was. And today I have a cryptocurrency hedge fund, because I decided that if I'm going to be in the financial services business, I need to learn about this. And I need to figure out, why am I so skeptical and why are so many people making money on it? And then when I got into it, Grant, I started to realize there are so many, and it's not every crypto. There's like 20,000 different tokens, and I'm not recommending them. I'm a Bitcoin guy with a little bit of cryptocurrency on the side, maximalism, right? But it's mostly Bitcoin maximalism for me. And boy, I could get into all kinds of stuff, but if you just look at oh man, I don't know where to start, but to keep it short, let's just talk about what money is, right? Money has certain properties, right? So we'll talk about, and if you put 3 things in your brain as we talk about these, it might help. But money is, first of all, it's portable, right? You could take a dollar bill and you can walk across the street, or you can go to get on a flight and go spend it, right? It's
That makes
portable.
sense. Yep.
It also means it has to be accepted, universally accepted. So your dollar bill in your wallet will be universally accepted somewhere else, or they'll change it into something else. They won't look at it like a conch shell like they used to 500 years ago and say, well, this shell's too small. We can't. And they used to actually trade with conch shells till some countries said, hey, we got a ton of these.
Yeah.
Let's go buy a bunch of their stuff. So it's got to be universally accepted. It's got to be standard, right? $100 bill is $100 bill. It's standard. It's got to be divisible. Well, sometimes you need a little less than $100. Maybe not in your case. Maybe you're walking around with wads of hundreds, but a lot of us, we need, dollar bills and $5 bills and pennies and nickels. And so it's divisible. And let's see what else. It's a store of value. It's a medium of exchange.
Makes sense.
So if you keep those, so looking at the dollar, I just described the dollar. Looking at gold is pretty good too. Gold's a good store of value, right? It's a good hedge against inflation. Doesn't pay you any interest or anything, but it's a good store of value and a good hedge of inflation. Problem is, I'll bet you that you don't have any gold on you right now, unless it's your ring.
Yeah,
right?
That's it right there. Yep.
That's it. So you're not walking around with a bunch of gold. And if you wanted to walk around with any kind of wealth in your pocket, you couldn't carry it in gold, right? It's heavy. You couldn't go across a border. Yep. Imagine if you're in Ukraine right now, trying to come out of your country because you have all this money, your bank account is closed. How do you get your gold out? They're going to confiscate it possibly at the border. If you're a guy, they're not even letting you leave. Yep. They want to make you fight. So gold has got some really great properties, and for 5,000 years, it's been a really great hedge on investing. They used to actually shave off pieces of gold, but then you couldn't measure it right, and so they went to silver, and then that's how coins got the ridges on the side of them. I don't know if you know that, is because people would shave off the silver, and then the coin would get smaller and smaller. So if it didn't have the ridges, they wouldn't accept that. Anyway.
I did not know that, Mark. Are you serious? I did not know. That's why the ridges.
Yeah, absolutely. And then we can talk about Bitcoin. And now let me just give you a background of Bitcoin. Bitcoin is called a cryptocurrency, which right off the bat eliminates most people from understanding what it is. But it's actually a really simple product. All money is a ledger-based system. When you have a bank account, it's held on the bank account's books as a liability. They owe you that money. Right. You can go in and say, I want to get my money, and they owe it to you. Right. So it's an asset on your books. It's a liability on theirs, depending on what you believe, how the Fed really interprets that. But that's another conversation. Yep. Yeah. But it's all a ledger system, right? You own a house that's got a value, and then there's a liability against it with the mortgage, those kinds of things. The same thing with cryptocurrency. And I'll give you the analogy just in case there's somebody here that doesn't understand what cryptocurrency is, because it can be very wonky. Imagine you and me and Susie are sitting around a coffee table, and I've got this book that's this blank journal, and we all decide to write a book. So I write the first sentence, the dog bit Johnny. Okay. And then you take the book, I pass it to you, and you go, Mark wrote the dog bit Johnny, check. That's what he wrote. And Johnny screamed is your sentence. And you pass it to Susie. And Susie says, Mark wrote the dog bit Johnny, check. Grant wrote and Johnny screamed, check. And then she writes her sentence. Yep. And then we just keep passing that around. And we pass around, and then we write this story. And the journal gets thicker and thicker and thicker and thicker. And now it's thousands or millions of pages. But you know what? The first sentence that I wrote is always in there. And the second sentence that you wrote is always in there.
Yep.
And when those sentences are in it, that's the blockchain.
It is blockchain. Yep.
It's an immutable ledger that can never be changed. Now, with Bitcoin, it has the advantage of this last component of money. And this component of money is one that the dollar doesn't have, or any other fiat currency doesn't have. And fiat just means by decree. It's just created by the government. It has scarcity. There's only going to be 21 million Bitcoin ever made. There's might have been 19 million made. The next 2 million will be made over the next 110 years. And so there's a scarce amount of those things. Well, you and I both know that, if you gave somebody a dozen roses, that has a lot of value. But if you gave them 2 dozen roses, that has some good value. And if, if you gave them, 50 dozen roses, well, that's cool. And it's a good story, but pretty soon that last rose doesn't have as much value as the first dozen roses. And if you gave them 1,000 roses and 1,000 roses the day after that, pretty soon you'd be like, what did I do with all these roses? Yeah. Now they're a nuisance and they don't have the value. So with scarcity, it's like if you ever saw that tulip mania thing that probably have in the Netherlands years ago, the Dutch tulip mania. That's indicative, right? Because there was a scarcity. They created scarcity, but this is legitimate scarcity. There's 21 million Bitcoin. Now, I'll tell you one more story, and I know I can get a little bit wordy, but I just got back from El Salvador.
Oh, wow!
And the reason I went to El Salvador is because, number one, I run a cryptocurrency hedge fund, and predominantly we're tracking Bitcoin. But El Salvador, this little third world country that had civil war and has drug issues and MS-13, and nobody goes there, has this really young, really visionary president named Nayib Bukele. And this guy said, if we're going to, and they use the US dollar as their currency, and they see what we're doing to our currency in the US. And he's like, why would I want to I want to create a change in this country. I don't want to stake everything on this US dollars that's being debased. So he adopted Bitcoin as the first legal tender coin.
That's what I heard.
And I thought, I got to go check this out.
Right? You go meet him?
Well, close. Interesting. I was hoping. It's a small country. I was on 6.8.
I thought you might have. Yeah.
I met some other really cool people because I got invited to something with a bunch of government dignitaries on a different cryptocurrency launch. But it was really cool. And so I went down there because there's this place called Bitcoin Beach. Oh, they ran an experiment for a year. And you might have seen it was just on a 60 Minutes episode. And Bitcoin Beach, they just went to everybody and told them, you have to start accepting Bitcoin. All the restaurants, all the hotels, all the people selling, the little shell bracelets and the necklaces and all that stuff. And they said, you have to start accepting Bitcoin. How do we do that? These third world people would say, well, you have this wallet that we're going to give you called the Chivo wallet. That's the name of it. And you put it on your phone. Well, everybody's got a phone, right? Mm-hmm. And so you just accept it with this little QR code. QR code, what's a QR code? And they showed them what that is. And so I went down there and I bought my dinners and my hotels all with Bitcoin. And these people all understand it. They're third world people. And I go down the street and I tell people about cryptocurrency and Bitcoin, and they look at me like I have a unicorn sticking out of my head. Right. And they're like, this will never work, blah, blah, blah. It will work because it has all of the properties of money, but you can carry it with you in your brain. All you have to do is memorize 24 words, and now you have access to your cryptocurrency wallet anywhere in the world. So when we left Afghanistan, they shut down the banks. Anybody who had wealth in the banks couldn't get at it. But if you had the foresight to have Bitcoin, you could get at it. So it's transforming. A couple more statistics. 70% of the world is unbanked. Imagine the person in Ethiopia or somewhere in Africa where they don't have banks on the corner like we do. No, they've never seen a bank. And so they use systems of barter and they use systems of exchange and they don't have a banking relationship. But with a $50 phone and a wallet that holds your cryptocurrency or your Bitcoin, you now have a bank on your phone. And so these people are now able to create this ecosystem where they can be banked. The same statistic happened in El Salvador. 70% of the people were unbanked and 30% of the people had access to some kind of banking relationship. After they announced last year that they were accepting Bitcoin as their legal tender, it's the reverse now. 70% of the country now has Bitcoin on their wallet because the country gave them $30 worth of Bitcoin. Wow. So they could either save it, spend it, give it to their buddy, whatever. And they're all part of this like new ecosystem. They're figuring it out and they're spending money. And it's fungible, it's accepted, it's a store of value, it's universal, it's divisible. You don't have to buy one Bitcoin at $40,000 or whatever it is today. You can buy a 100,000th of a Bitcoin.
Yeah, you buy fraction, right? Yep.
Yeah. So that's the long answer to a very short question.
Well, it's amazing because, it is. It is the future. Yep. A lot of organizations pursuing it. Who feels at risk by crypto? Who is it that's going to lose, right? What organizations or governments would fight against this, and why would people fight against moving to crypto?
Well, first of all, it's more accepted than you think. There's another country that accepted it in Africa. So there's two countries now that are accepting it as legal tender. There are cities. There's a city in Switzerland that is now accepting it. It's being widely adopted. So first it was just a couple of nerds. Mm-hmm. And then, I don't know if you know this, but the first transaction on Bitcoin was to buy 2 Papa John pizzas. Mm. And I think it was for 10,000 Bitcoin. And the guy goes, yeah, I'll give you the pizzas for a stupid 10,000 Bitcoin. Well, that Bitcoin is now worth $453 million. But that was the first real transaction. And it's actually a great story about 2 pizzas being worth $400 million or whatever the number is.
It's amazing. And I did not know that story. Wow.
Yeah. That's they call it the pizza trade. But there are some entrenched interests in doing this because the government, first of all, is debasing our currency. Our currency has lost 99.5% of its value in the last 100 years, right? No. That's why an average house today costs $350,000. But the house, a similar house in 1920 costs $5,000. Yeah. We've debased our currency to almost nothing. Yep. And we feel like we're getting rich. Oh, our houses are going up, but you're not getting richer. It's just the denominator is getting more debased. Smaller. Yep. So the governments are all threatened by this, and they don't. So what they're doing is they're trying to come out with something called a CDBC, a centralized digital banking currency, right? CDBC. And they think, and if you think about the dollar, it's already electronic. Like on my phone, I have Apple Pay and Google Wallet and Visa, and I have, I can move money through my bank account. One other thing that Bitcoin you can do is, and I had somebody that wanted some money from the hedge fund last week, and she asked for the money on Wednesday. I had to clear it out of the brokerage firm on Thursday. It had to get to my bank on Friday, and then I had to wire it over the week, on Friday, and she got the money on Wednesday. And I said, if you had just asked for Bitcoin, you would have had this money in 10 minutes.
Yeah.
Because Bitcoin never closes, right? You can send Bitcoin on a Saturday, a Sunday at 3:00 in the morning. So the governments are trying to figure out how to get in the game, because if they're not in the game, they're going to be out of the game. Yep. The problem is you don't want the government to be in charge of having your control of your money. That's the problem we have now. You don't want more of that. Nope. And then they could just print that in infinitely, like many of the other cryptocurrencies.
Don't get me started.
Like they've been doing.
Yeah.
And that's the big deal.
That's a huge deal. Okay, so let me ask you this. So you have shared so many great insights, Mark. It's amazing. You're a wealth of insights. You're a wealth architect, I guess. You're living up to your name. That's for sure. So where could people go to learn more about you and what it is you and your team are providing?
Well, there's lots of places. I'm, Mark Yegee around the web, but I set up a site, a little page for us here for this particular podcast for your audience. And if you want to grab a pen or put it in your phone, it's go.destinycreation, because we believe in creating your destiny. So it's go.destinycreation.com/grant.
Very nice.
And so if you go there, we'll have this podcast there and some notes and some links, but I'll give you guys who are listening not only a free ebook called Regular Paychecks, is how to create regular paychecks out of the stock market. But if you poke around there on our website, you'll figure out a way to get a free course. It's a 7-day, we call it the accelerated training program. It highlights and teaches you actually 2 of our programs. One is called the Stock Trade Genius program, and the other is Cash Flow Machine. One's for growth and one's for income. And then you can poke around and see if you want to go any further with us. But the bottom line is I want to educate you. I want you to figure out what you don't know, right? Because there's a lot of times people just don't know what they don't know. And I don't want to see people happy with 8% returns having to work for 45 years and then, retire on 20% of their income. I want to see people wealthy and, thriving, and even in this market. So this quarter has been the worst quarter since the Great Depression, the worst beginning of any year since the Great Depression. Most of our investors in my hedge fund made money this quarter.
That's
So
amazing.
it shows you that by playing defense, you actually can play a little bit of offense. And
Yeah,
I'm
I mean,
proud
if
of
you
that.
look at the market today, we're already back to like it's almost wiped out. Like in fact, I think it's wiped out at least on the indexes the entire year, right?
Yeah.
It's wiped
Right.
out like the entire year. That's amazing.
Yeah, at least yeah, and that's what the market does, right?
Mhm.
It goes up. They always say it goes up with the staircase and then it comes down with the elevator. So
Yeah.
the market just gets hammered really quickly, and it goes back, and you go, "Wow, it took 2 years to get this, and it gave it back in 3 months."
It's gone.
Right?
Yeah.
Gone.
Amazing.
Yeah.
Okay. So it's go.destinycreation.com/grant. I appreciate you doing that. That's very kind. Mark, thanks for your time. Any final comments you want to share?
Not really. I mean, first of all, this was a lot of fun. You asked some really great questions. You have some really great insights, and I hope I didn't talk too much. I have a saying, and I'll just leave you and your audience with this saying. It's never give up your power in your health, your wealth, or your time. So thank you for your time, and I was so honored to be here with you today, Grant.
Thank you so much, Mark. I really appreciate all your insights and the wisdom that you shared. Everybody, thanks for listening to another episode of Financial Investing Radio. And until next time, go get your destiny creation.
Thank you for joining Grant on Click AI Radio. Don't forget to subscribe and leave feedback. And remember to download your free ebook. Visit clickairadio.com now.